4 stocks on my watch list for potential buys this week. Like many of you, I put money on my portfolio on a weekly basis, and every single week I'm either looking for new investments or old investments to increase my overall position size. So in today's episode, I'm going to take a closer look at why Advanced Micro Devices, Microsoft, Alphabet, and a ticker SMH in the semiconductor market are on my potential buy list this week.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
And if you have been following me and this channel, you know this kind of episode series I haven't done for a few weeks, and unfortunately there have been some personal issues that have kind of arisen with my family that kind of forced me not to invest in the past few weeks, but things are kind of getting back to normal with my income and everything else, so I'm able to kind of go back to my original investment style. So like I mentioned, the 4 stocks I'm looking at right now are AMD, Microsoft, Google, and a semiconductor ETF. We can see AMD is the one down the most, roughly 63% from its 52-week high. Then we have VanEck SMH, which is down roughly 40%. We also have Google down roughly 34% and Microsoft down 31%. I do want to say it probably seems like a scary time to be investing in the market right now, but as long-term investors, I do believe this is a great opportunity. Obviously, these opportunities can last for a long time. I'm not saying the stock market is going to go up anytime soon, but if you are a weekly investment, I think you should be excited to see stock prices at this low, especially if you have a multi-year time frame like me. I know there's certain investors that might have a short time frame. Unfortunately, I can't relate with you because that's not where I'm at in my financial journey. But to all, I want to wish the best luck out there. So let's take a closer look at some fundamental values for these stocks. And for me, I like to enjoy cash and short-term investments, cash from operations, and total long-term debt. This kind of gives me a little bit of an insight of how the company's financial health is. And later on the episode, I'm going to explain one reason why I'm bullish in each of these companies and why I'm super excited for the long term of things. So if you take a closer look at AMD, roughly $6 billion in cash and short-term investments, $3.7 billion in cash from operations in the trailing 12 months, and $2.8 billion in long-term debt. So for me, AMD has a strong financial health. If we take a closer look at Microsoft, $105 billion in cash and short-term investments, $89 billion in trailing 12 months of cash flow from operations, and roughly $50 billion in total long-term debt. Again, another company with strong financial health. Next, Google. I actually just did an episode yesterday. Make sure to check it out, where I take a closer look at some really good bullish reasons for Google. But we can see cash and short-term investments, $125 billion, $95 billion in cash from operations in trailing 12 months, and $13 billion in total long-term debt. This is probably a S++ balance sheet, one of my favorites. So now if we take a closer look at some of the reasons I'm super bullish, let's start off with Google. Right now sitting at $98.68. But for me, the main reason to be bullish in Google is YouTube. I think YouTube is at a great place. The advertising market obviously is taking a hit, but they are kind of producing new solutions for the YouTube market, especially with YouTube Shorts. Like I mentioned in previous episodes, I'm someone who's a content creator, right? So I'm seeing the back end of what's happening with this platform, and I'm super excited. I also believe, as maybe a lot of people during these macroeconomics start to kind of maybe reduce certain subscriptions, instead of kind of paying for certain subscriptions, they might spend a lot more time on content like YouTube and watching more videos. Since it's free for most people, all they have to do is watch ads. And if you are enjoying the content, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Thank you. Now, if we take a closer look at SMH, this is a semiconductor ETF. I am very bullish in the semiconductor market. I believe semiconductors are going to continue to be used in numerous places. For those that are not familiar, I actually have a master's degree in electrical engineering, and I used to work for a company called General Dynamics, where I saw first world experience on how emerging technology is going to shape the world, and semiconductors are a main reason for that. So for the next 10 years, easily, semiconductors, in my opinion, are going to be a true winner. VanEck, for those that are not familiar, this is a ticker SMH. They have some pretty good holdings. Their top 10 holdings are some of my top plays in the semiconductor market, and I do believe if one doesn't want to get individually stocks in this market, a semiconductor ETF like VanEck is super important, especially when their expense ratio, I believe, is roughly 0.35. The other thing, it's a very controlled ETF with only 25 holdings, and I personally like that concentration a little bit more. Kind of pushing into the semiconductor stocks, I believe my third stock, AMD, is another one at a strong potential buy. Right now, we can see this is a company that gave preliminary results that caused stock price to drop over 13% in one single day. To me, AMD, even though preliminary results were bad for the consumer market, this is not something new. If you've been following this channel, you know that the consumer market was kind of going down, especially in the PC space. What I'm super excited is their data center market. It's up 45% year over year, 8% quarter over quarter, and they are expected to continue to grow in this market space for the next few years. Super excited for their upcoming data center server solution, Genoa, which should be released sometime within this end of this year. And I do believe it's going to be providing great results for the clouding market, for the data center market, and this is going to be a great win for AMD and its long term of things. The next one is Microsoft. Microsoft is another strong growth tech player. We can see down 5% on Friday. It was a horrible day on Friday, but overall, what am I super excited about Microsoft? First, I mean, we saw that strong balance sheet, but the Xbox platform, they are really focusing in the gaming world, in their own world of metaverse as well. The cloud gaming, they're doing an amazing job with their Xbox Game Pass, and just the overall Xbox platform continues to grow dramatically. So I'm super bullish in their gaming aspect. I want to say for Microsoft, I had to obviously shout out Microsoft Azure, their clouding platform. This is another strong player for Microsoft. So those are two main reasons to be bullish in this company. If we take a closer look at forward PE ratios, all these companies are sitting below 25. AMD at 14.8. Again, I am super bullish in AMD. I do believe this is one of the few semiconductors that have both growth and valuation at play at the proper values right now. Microsoft forward PE ratio 23. Obviously, they are going to take quite a hit with the kind of consumer market with their laptops, but the overall data center clouding storage place is a huge world for Microsoft. Alphabet, like I mentioned, 19 forward PE ratio, but their solutions in the advertisement space obviously will take a hit with the overall macroeconomics, but I can see this growing in the long term of things as they continue to innovate and bring new solutions for their advertisement world. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.